Stanley. Thank you so much for taking time out, Chetan, and joining in. Let's begin with the kind of verdict you have on the overall budget. You've described it as a good growth budget. What have been some of your key takeaways?
Well, I think the most important takeaway was that despite it being the budget which is closer to the general elections, the government has kept the focus on pushing for growth, pushing for capex. And I think that's really very important for India at this juncture, where you do have some headwinds to growth from external demand slowdown. You do want to have domestic demand supported with capex, and the budget precisely aims to achieve that. So we think the budget was really focusing on driving capex and good growth.
Okay, capex and good growth. But what's your own assumption with respect to the GDP target for the year? Because 11% nominal GDP, some people are calling it a bit more optimistic. What's your take for FY24?
So we are at around 10.5% odd. So we think that number is pretty reasonable. And when you look at the tax revenues to GDP assumptions, they also look pretty much in line with what was sort of revised estimate for financial year 2023. So we think all the numbers in terms of the revenue estimate, nominal GDP growth estimate, and the deficit estimates seem pretty much realistic.
Good morning. Just wanted to understand what then reaffirms your view on domestic demand strength, like you're highlighting in your recent note?
So, look, I think from the budget perspective, as I mentioned, if you look at the two key line items, revenue expenditure to GDP and capital expenditure to GDP, there is a systemic trend that has emerged now with government trying to keep that under check. And capex to GDP has been lifted up to a 19-year high of about 3.3% of GDP. And I think this is something that is kind of happening after a few years. We have been seeing that the government has been focusing on revenue expenditure and redistribution. But now, from 2019, we can see the government is taking systematic steps to boost private investment. And parallelly, from their side, they're trying to boost public investment in infrastructure. So I think this is just continuation of the overall policy shift that the government has taken up to try and boost private investment. And in that process, to create resources, they are cutting down revenue expenditure to GDP. So I think that's the big picture policy thing. And more importantly, they have taken other measures outside of the budget, which we all know, which is the reduction of corporation income tax and the PLI scheme. That's helping that overall objective to boost private sector investments.
So on a relative basis, Chetan, considering, off late, it's really been a market or economies of relativity, right? I mean, 2022, we were boasting and basking in the glory that India has been the best performing market. And now year to date, you've got many other EMs which are way more attractive. And we've seen an FI exodus out of India equities. From an economy perspective, I wanted to understand, can the India economy still clock the best growth as the world faces recession or recessionary fears?
So that's right. I mean, so we as you know, we put out this detailed blue paper co-authored with Rhythm and Upasana from our India team. And our conclusion there was that India can achieve 6.5% real GDP growth over the next 10 years. And for the financial year 2024, we are expecting GDP growth at 6.2%. And with that 6.2% GDP growth, India will be one of the top performing G20 economies, I'll call it amongst the large economies. And there is no change in that forecast. There was some concern with growth slowdown in the month of October and November. But as you can see from the January high frequency data points that our India economist Upasana Chachra highlights, is that you've seen a pickup in auto sales, you've seen pickup in rail freight traffic, in power demand. So we think that growth is returning back to that path where we will, for the full year 2024, be able to achieve 6.2% GDP growth.
Chetan, we of course have the MPC meeting which is underway. Tomorrow we'll get the verdict. But apart from the 25 basis point hike, which is the consensus, what is the commentary that you're waiting to hear from the governor?
Sorry, can you repeat your question?
Chetan, the question is on the RBI Monetary Policy Committee meeting. We'll get to know the outcome tomorrow. My question was that apart from the 25 basis point hike, what are you expecting with respect to the commentary?
Well, we think that the RBI may not really give a clear indication of whether they are pausing to do additional rate hikes. But in our forecast, we think that this will be the last rate hike in the cycle. And we think that there will be a long pause after that before they take up any kind of decision to cut the policy rates. But in the meeting, we don't think that there will be a clear indication of them having actually paused, because there are some additional factors that could play into the picture going forward, i.e. what happens to oil prices, at the same time, what happens to Fed's policy decisions. And you saw that on the last week, Friday, jobs data point has raised markets' expectations for Fed policy rate hikes. And if that kind of development continues in the US, it will mean pressure on the rupee, and RBI will therefore have to be conscious of that additional inflationary pressures out of depreciation of the rupee. So we think that they will pause, but they will sound tentative on not having taken a clear decision to pause in the meeting.
With the kind of optimism over China's demand growth, we've seen crude oil prices that have edged higher. What's your outlook on that? And give us a sense as to what you believe is going to be the direction that we'll see in that safe haven demand that we've seen play out when it comes to gold prices as well.
Well, I'm not the expert on commodities, but I'll just share the views of our commodity strategy team. So they're expecting oil prices to rise from here towards about $100, $110 by the year end. And that's because they think that the demand-supply balance will become tighter with recovery in China's demand for oil prices and their reopening.
Okay, Chetan, so that's the word coming in as far as some of these other commodities and asset classes are concerned as well. But the entire debate which is going on in the US is the commentary coming in from the Fed chair that disinflationary pressure is something we'll start seeing by the second half of the year. Some are calling it transient in nature. What's your take when it comes to inflation in the US and back home as well?
So in the US, we think inflation will continue to moderate. The key number that the Fed really looks at is personal consumption expenditure deflator. Currently, it's running at 3.1% on a sequential basis, 3-month moving average. And we're expecting that this will slow down or decelerate towards 2.5% by middle of this year. And at the same time, we think from Fed's perspective, they will also be looking at wage growth dynamics, which has also come out to be more favorable. It's decelerated down to 4% as of December quarter. And we think that as this wage growth number continues to decelerate towards the end of the year in December 2023 is when Fed will embark upon cutting policy rates. And as far as India's inflation is concerned, we think that it will continue to moderate and move towards the range of 5 to 5.5%. And it is this outlook of inflation is what makes us believe that the last policy rate hike is the one which will be taken up in this meeting by the RBI.
With respect to this entire China reopening, there is this debate whether China is a better place to be in this year versus India. What's your take on that?
So our regional strategist from a markets perspective has been precisely making that call. And he is been arguing that India will underperform China because China's valuations are lower and earnings growth will accelerate because of this reopening. Whereas for India, the concern is really the valuations and because of which they are underweight on India in the regional portfolio.
And any sectoral trends you can talk about, Chetan, in India itself?
I would leave that to my colleague Rhythm Desai, whom you usually do have on your show. So I'll stick to the macro.
Okay, Chetan, great to have you on the show as always. Glad that you could take time out and join in.